What is happening, YouTube?
I feel like I've created a nice little niche for myself. I do BRRRR deals, which isn't all that uncommon, but I've gotten very good at maximizing my rents. I guess I'm trying to think of creative ways to structure a partnership that works good for both of us.
And I know it's done, but it made everybody's head spin that I talked to, because I got some buddies that do that, and they do very, very well.
I've made spreadsheets, I've done all this stuff, and I just confused myself.
Play a small syndication game with him.
And these are all good problems to have, man. I mean, you're off to a really strong start.
This is Matt Faircloth, and my company's called the BRRRR Group. I can't go anywhere without my co-host, Justin Fraser. Let me bring Justin Fraser in.
Hey, how's it going? Happy Monday. Mike had questions and emailed helpme@BRRRRgroup.com.
And so we got answers. Here
we go. Welcome, Mike. How are you?
Hey, thanks for having me, guys. I appreciate it. My name is Mike Uridosi. I live in Plymouth, Massachusetts. I feel like I've created a nice little niche for myself. I do BRRRR deals, which isn't all that uncommon, but I've gotten very good at maximizing my rents and comparing rents in the area.
Tell us how Justin and I can help you. What's on your mind?
I currently have 27 units. I'm closing on a single family BRRRR in 3 weeks or so to make 28. I currently have 2 properties paid off. I'm getting a line of credit from a bank. I also have a group of 5 properties I'm doing a cash out refi on right now to get some money out of there too to buy more units. I actually just talked to my tenant today at a property who's going to be buying it from me. So I'm going to 1031 that into more units as well. So I kind of have all that going on my personal side. And a friend of mine and I were talking, and he makes a lot of money, W-2 income. So he was looking at ways to kind of help tax-wise with what he does, because he gets crushed. He 100% wants to start investing with me, but I guess instead of just doing like a straight 50-50 with him supplying the money and me kind of managing everything, I guess I'm trying to think of creative ways to structure a partnership that works good for both of us. You know, maybe he takes more of the tax benefits, I take more of the cash flow, but I'm looking at trying to double my portfolio in the next year or so. So once I do that, I'd want to hire somebody in-house to manage my property. I'm kind of looking at potentially the money that I'll make with him to hire somebody to offset that income, but I'm kind of all over the place on how I want to structure it, how I want to do it. His wife's a stay-at-home mom, so I talked to a few accountants, so she would really probably be the one investing with me. I'd teach her the business and everything so that she could be a real estate professional in her taxes. So
okay, I want to make sure you're onto that, because I see where that could go.
I'm trying to, cross my T's, dot my I's. My main questions are, I guess, one, do you think I should just continue to grow my own and not take partners in at all, or take him in and try to grow faster?
So the answer is yes, you should do that, which is both those things. You should be pulling as much equity as you can out of your deals. Absolutely. I mean, money's cheap. Bank debt's very, very cheap right now. You should absolutely be pulling down as much as you can and redeploying that capital into new deals. I know a lot of people that BRRRR'd their way up to financial freedom. I mean, there's people out there that are BRRRRing enormous properties and stuff like that, but you don't see it very often. What you see is people BRRRRing like 1, 2, 3, and 4 families. What's the biggest unit you got, unit count wise?
9.
You got a single 9.
Yeah.
Okay. And you BRRRR'd that?
Everything else, yeah, but that was like probably 3 years ago.
I would keep doing the onesie twosie BRRRRs for yourself, because I got some buddies that do that, and they do very, very well. Offering an investor equity, it's not going to make a lot of sense on a onesie twosie BRRRR. Go and find like a 15 unit or 20 unit, like a bigger splash that would be hard for you to BRRRR. If you find like a stable 20 unit where the numbers make sense, probably not going to add enough value to where you can BRRRR into it anyway. And the problem that a lot of BRRRR investors have is, unless there's a bunch of juice in the lemon to squeeze, they can't do the deal. Like, you got to have a property that's a beater that needs to get completely repositioned, returned around, and everything like that, so you can create the value all the way up here to refi, to pull your capital out and recycle it and do over again. The problem is that not every 15, 20, 30 unit that's on the market is a beater. Play a small syndication game with him. First question is, yes, you should keep doing what you've been doing and using the cash you're recycling out. Do that to build your portfolio from 28 and take it up to 50. Then do big deals with guys that want tax advantages on the other side. And I'm not talking, you don't have to do like a 200 unit apartment complex. I wouldn't start there. Do a small deal, because you'll probably qualify for the debt for a small, like a 15, 20 unit.
You also stated a few different needs. So he has more of a tax benefit need. You have maybe more of a cash need to fund this next hire, or your first hire. Certainly, if you're going to be managing it, not only should you be taking, your equity side, which you guys negotiate for ownership, but then a fee for managing as well. If you make it beneficial enough for him on the tax side, you can maybe be more aggressive on the management side and take your fees and hire somebody.
If he's okay with that. And maybe you take the majority of your profit from fees, and everything like that. And as Justin said, that enables you to hire somebody sooner. To do that, you're going to have to give your investor heavier equity.
Or what if he gives them a higher, either a pref, or he can negotiate a higher percentage of the tax benefits?
We have tried that, and I've never been able to make it work. And I know it's done, but it made everybody's head spin that I talked to. If okay, here's the flow of tax benefits, and I want to have a heavier bit of that stream go towards certain people, it can be done. We're going to launch a blended fund, Mike, and that fund would have given heavier allocations to those that invested with cash versus those that invested with an IRA. Because IRAs don't need tax benefits. But the problem we ran into is if you slant so much their way, they could end up with a negative basis where whenever that property sells, they're going to have to write a check to the IRS for more than they ever made, on the property. Like a negative basis can be a big problem. That's what stopped me. There's still ways to mitigate it, but it became a problem. So talk to a tax account. Justin and I, not CPAs or tax accountants. Yeah.
So the cleaner way is probably through a management fee, a management agreement where you are the property manager. You guys negotiate equity and split things. Say it's 50-50 or whatever you negotiate, but then you can take a higher fee for your costs. And the nice thing about that is that person that you hire is not only going to be helping you on that deal, but all your other deals and properties as well. So even if you're, breaking even from a cash flow perspective on the one, if it's funding everything else, you're going to see everything start to grow really quickly.
I maybe would charge a heavy PM fee and then just do a dollar for like a percent for percent equity split beyond your fee.
I've made spreadsheets. I've done all this stuff, and I just confuse myself. So when I talk about taxes,
I think cleaner is better, and this will be your first deal with this guy. And anytime you're entering into a partnership, because this is going to be a partnership, and you're going to hold this property for years, most likely. Be very, very clear about whose responsibility is what's expected of you from a partner perspective, but then also as the manager perspective, because the business can fire you as the manager, even though you're going to be in both roles. You want to make sure those roles and compensation are clearly delineated for the value that you're bringing, because one day, maybe Mike's management company is not doing so great, and the partner steps in and says, "Hey, we've got to fire." And it's not something you want to talk about, but it is something you have to talk about.
Well, maybe you scale up. Maybe you build up your holdings. That happened to me and Justin both, right? We both used to self-manage, but now we don't, because our holdings got to the point where our time is better spent out finding deals. You got to figure out where your time is better spent. For now, it's running a PM company yourself, fine. But once you cross over 100, 150 doors at some point in the probably the closer future than you think it's going to be, you're going to be like, okay, I probably should transition. So that's a good thing.
Because I've sent direct mail to every multifamily in my town and everything too. There's not a ton of units over 4. There's probably, so I'd probably have to expand my reach and go out of my zones. I mean, getting up towards Boston, numbers are insane, and you're competing with, I kind of don't want to go there.
No, don't even bother. Yeah.
So going to Rhode Island, New Bedford, Fall River, different areas, you get a different quality tenant, rents are much lower. So I want to get in the bigger stuff. It's just I'm going to have to really hammer the 10 different units that are over 4 in my area, in order to try to get some of them. But because even 2 families in my area, I mean, they go for like $450, $500, but rents, I could cash flow about $1,000 a unit on them, once they're renovated and rented out. So, the numbers still work pretty good. It's just, I'd rather get a 4 unit than a 2 unit. It's just finding them, but that's where I want to put all my attention if I am going to go with this investor. Because I could pay retail technically with him, if all the cash flow stuff makes sense.
Yeah. So. And not have to worry about the BRRRR every time, because that's good. That's going to get old with his money. Yeah.
Yeah. BRRRR deals too. It takes you a year to even touch the money, so you go over budget, and and then you need the money to close, and so you're pulling money from other accounts, and it's like a scramble, every time you do one. It
can be a grind, man.
Construction numbers, never hit. So
Yeah, I know.
Yeah.
you always go over budget. It takes longer. It takes longer to refinance, especially now. So
It can be a grind from what I understand. Yeah.
It has been for sure. So
cool.
Cool. Awesome.
Well, I think that we've given you at least some ideas on getting started. And I think that there's like big and small ways to get going and investing. And that this is certainly a way to do a little bit of both, you know, and maybe work with partners on slightly larger deals and work on smaller deals by yourself and that. So I hope I've given you a few different paths.
And these are all good problems to have, man. I mean, you're off to a really strong start, and you got more money than you need, and you know,
I'm refinancing this. So, this tenant's buying this from me. I got to own this free and clear.
Yeah, it's all falling into place.
I hear a lot of good moves you've got going on, man. So I think that awesome. I think you'll be just fine. So well, good luck with that.
Awesome. I look forward to it, guys. Thank you.
Thanks, Mike.
Nice to meet you, Mike. Take care.
Nice meeting you too. Thanks.
It's really about how to structure loans and equity for the very first time on deals. So,
I mean, this partner wants tax benefits, so equity makes a lot of sense. And you know, I think that we gave him some options, and you know, Mike's got good things going for him. So I'm glad that he came on the show, and look forward to see what he's going to do next.
Thanks for watching, guys, and have a great and profitable week.